Hey everybody, it's Janine here from My Pennies, My Thoughts, and today we're going to be talking about insurance. So I had a coworker reach out to me a couple weeks ago wondering the difference between whole life and term insurance because our benefits were set to renew. Insurance can be a very confusing product. There can be many different types of policies, combination of whole life and term, and when it comes to choosing which one your family should go with, it's tough to know where to start. First, we're going to look at whole life insurance. Whole life insurance insures you for the duration of your lifetime. So if you live till 50, it covers you until that point, and if you live to be 115, your life insurance will also cover you to that point. The pros are obviously that this policy is for the duration of your life, and once you've been approved, they can't revoke your coverage. As well, there is typically a cash surrender value piece of this insurance policy. As the value of this insurance policy grows over the duration of your life, there is a piece to this insurance policy that is invested in the company. You'll receive dividends in your insurance account that will grow this sum of money, and in the future you can actually borrow against this amount. Some of the disadvantages to a whole life policy are if you do choose to borrow against that cash surrender value, you will be taxed accordingly. Additionally, whole life insurance can be very expensive, costing individuals hundreds of dollars per month if they sign up in their mid to late 20s. This premium will only increase with age, so the earlier you sign up, the better. People who would choose a whole life insurance policy are typically risk-averse individuals and individuals that don't believe they'll be able to pay off all their debts by the time they die. A term life insurance policy can be purchased in 5, 10, 20, or 30-year increments. This life insurance policy will cover you for the duration of the term. So if you pay into it for 20 years, you're covered for 20 years. After that point, you will not be paid out any money, and you will no longer be covered by your insurance policy. The benefit to this type of insurance is that it is typically a lot cheaper than whole life insurance policies. So this might be for someone who thinks that within the next 30 years, they're going to get their financial house in order, pay down their mortgage, and put their kids through school. Setting yourself up for financial success means that you don't have to renew that term life insurance policy, because when you do renew it, it can be a lot more expensive. The cons to this type of insurance policy are that you are only covered for the duration of the term. There is no amount that you can ever borrow against in this type of life insurance policy, and it can be harder to qualify if you're looking to renew a policy later down the road. As I mentioned earlier, if you think that you're going to get your financial house in order in the next 10, 20, or 30 years, this type of life insurance policy might be for you. Crunch the numbers on my website, so I'll leave a link below, but what I found was typically the term life insurance policies were much more affordable and suited our family's needs. That being said, only you can decide what's right for your family, and understanding how much of an obligation your family would have to cover in the event of your death is important. Before you choose an insurance policy, make sure you understand how much coverage you need, because this will play into the cost of your premium. The best way I've seen this calculated is to total up all your debts that you think that might be outstanding within the next 10, 20, or 30 years. So for example, let's say you have a $250,000 mortgage, $10,000 in student loan debt, and $1,500 in credit card debt. Additionally, you have one child and it costs $250,000 to raise them from age 0 to 18. Your salary is $60,000. So let's say you choose to opt for a $500,000 insurance policy. This will ensure that should you pass away, your partner will be able to raise your kids, send them to university, and pay down any outstanding debts are to your name. Understanding this amount is a great way to plan for the future. Insurance is not a wealth building tool, and it's something that unfortunately many of us have to pay into and hope that we never have to use it. Having a proper insurance policy that doesn't break the bank and ensures all your financial needs are met is a great way to set your family up for future financial success. If you enjoyed this video, please give it a thumbs up and subscribe to my channel.